Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the Indian stock markets and then plan for a better trade for the next day. So here we have the charts of the Nifty 50. What you see here is a clear gap up. A new gap support is created at 70,559 kind of levels, and it could not close above the opening, so it's formed a red candle, not bearish, but definitely it has gained for the day. It was a bullish move that happened in Nifty, and it looks like the trend line channel breakout has happened, right? Not in a concrete way. If this had been a solid wide range candle, would have been more sure, but yes, definitely the trend line channel breakout is happening with a good support on the downside. So we already have the 200 DMA support, and it influence of a Fibonacci retracement from the swing low, that is coming near the 17,000, that is also there. And if you look at Bank Nifty, we have a green close and a very good gap up with a new gap support that's created at 38,400, right? And very good bullish move has happened today. It was Bank Nifty was more or less more comparatively, not more or less, it was comparatively more bullish. It was looking trending upside, while Nifty after the gap was trending slightly range bound downside both, right? So let's get to the numbers and see. So it was gap up on both, on both indices. And as I said, intraday, if you see, Nifty was kind of downside after the gap up, but closed green of less than 1% move. Bank Nifty closed 1.55% up move, and it was trending upside on a range bound. So the major thing is that Bank Nifty cleared a previous swing high, the lower high in the price pattern, got cleared here. So that is something. There is a lower high which was formed here. You see the flags here. So one of those is going to just clearly good bullish, and a trend line channel breakout also seems to be happening on both the indices, which is price patterns are clearly bullish, right? Bullish move is what happened. Support levels and resistance levels, if you lose, so the resistance immediately would be at 79.21, and for the Bank Nifty it was 39.425 resistance. Let's look at this. Bank Nifty 39 would be the previous swing high, and on the Nifty the resistance would be 929 and then 8114 upside, right? Similarly, downside resistance would be, the support would be 17,560, and then you have 17,940, right? So 17,560 the first gap support for the Nifty, and then similarly Bank Nifty it is 38,401 would be the new support that is created immediately. After that you have 36,808 previous, again another support. So multiple gap ups, and so that gaps up all would be kind of acting as supports, when there is a retracement that may be happening, right? So that's the volatility bands are rising up, no doubt about that. Talking about the band expanding on both sides, right? Volatility is there, and it's walking on the bands bullish. Momentum clearly in bullish, trend clearly bullish, and there was a bend that was there in the short term Bank Nifty on the ADX strength indicator, the green, but that also seems to be fine now. If you look at the trend, for the Bank Nifty, we could see that the strength was having a bend, and now that bend is cleared and it's back to bullishness. So that's the ADX indicator they're talking about, the trend indicator. Trend and momentum clearly bullish, and India VIX also cooled off. It was spiking very close to 20, but still it is not that far away from the 20. But 6.5% of cool off has happened today, which is good. Futures open interest was long built up on both the indices, so it is an expiry day, so it may not be that much. Open interest may not be that much relevant, but still worth looking at. 17,500 to 17,700 is the August 18 weekly expiry levels, and 38,000 and 39,000 is the August 18 weekly expiry for the Bank Nifty. Remember that there is Monday is a holiday, so tomorrow is a trading day, and so so the time decay benefits could be there if you're taking swing trades weekly expiry. PCR is still bullish, 1.16 and 1.06. So don't consider the YI levels as of now, because it's a Friday first trading day that's going to happen. So data may not be option writers, data may not have fully come in. So don't put in too much of emphasis, but those are the levels for reference. Sectoral performance, if you see like IT, pharma, that did well. Reality also performed today. So overall, if you see, FMCG did not perform, and all others, metal and others were all flat kind of. So IT and pharma was the leaders today, and reality also. But short term, if you look, it is in the bullish momentum, for all the sectors, all the major sectors you're talking about, right? And the most bullish is auto and FMCG, that continues to be there. Most bullish in the sense the momentum perspective, where the weekly and the daily both are indicating bullishness. RSI above 60 levels, right? Heavyweights, all the banks in the IT did well today. HDFC Twins, both of them did well, more than 1% of move, and ICICI Bank exceptionally well. Kodak also has done well. And IT stocks, both of them, Infy and TCS heavyweights, both of them did well. Reliance was kind of flat, 0.3% only move. So that is heavyweights action today. Now the good news is that Fyers continue to buy for the 10th day consecutively, and today it's 2,000 solid 2,300 crores of buying, and Nifty and domestic institution very small sell off that happened. So, but yeah, so that is very positive that institutional participation is supporting the market and making big moves on the rally. Crude oil, if you see, it is rising today. It was falling and it was at a support zone and reversed. So it has climbed back to the 90, probably because of the dollar. No, I'm not sure of the correlation, but the momentum is now not in the bearish zone anymore in the future, which is not that very positive, that crude price is not going ready to go below the 90 or 85 kind of levels. It's still climbing. It has climbed back to the sideways momentum right now, but still, yeah, it's less than 100 at least. 100 maybe the new 60 probably. I don't know. And coming to the foreign currency, the dollar is breaking down and moving down, but for some reason there is a small spike that happened below the 80 on the USD INR currency pair trading. The dollar index is cooling off, which is good. Crude oil has made a small spike back, which is not that great. Yeah, gold is in a support zone, trying to stay afloat, and some consolidation is happening. Basically, most of the time gold consolidates. But remember, in the medium term and long term, there is a cup and handle formation that is still there. So big breakout may take years or months. You don't know how much. So that's what the hedging instrument gold is all about. ACS green and US indices are super green and bullish reversal. It's at a resistance zone. So if this rally can continue for above the resistance zone, it will be very good. It remains smart as a holiday. There is 31st of so it's also coming as a holiday. So it's a truncated month there. If you're taking swing or partial trades, decays, you have to plan accordingly. On the time decay factor while taking the trades, right, and looking for opportunities. Most stock picks, as of today, you could, because all of the trades are in bull zones, and so overall, if you see the market, just wrap up. This is for August 12th, Friday, tomorrow. And my view is cautious bullishness is what I have. Right. The reason why this cautious still continue to be cautious is because yesterday there was a gap up. Definitely, the market has digested the US inflation rally and then made now the total move from the bank Nifty is around more than 20% from the last swing. So it's a big move. Big move has happened. VIX also had cold off today. That was a worrying factor, but still very close to 20. So cautious trades, very close to 20. You have to be cautious, but below 20, short-term trades should be okay. So that cautiousness element has to be there because uncertainties are not all completely digested yet, right? We have some more previous swing highs which need to be clear. There's a gap in the Nifty in 17,921 kind of levels that is still there. VIX was not really cold off below the 15. That has not happened. So there is this element of uncertainty still there, but the indicators on the momentum and the trend, price action patterns, breakout filtering channels, open interest, Bollinger Bands all continue to say super bullish. But there can be some kind of correction that can come in. Definitely, it has rallied up without much. So 2-3% of corrections can come in any time. One is least expected. So you have to be cautious about that. That is all. Otherwise, the rally has to be taken whenever we get a dip. Is what we with tight stop loss is all that we can do when the rally is happening on the upside, right? So that's a view. So tomorrow, if that helps you to frame your trade plan and trade view in some way, consider the like button and subscribe if you're not, and share it to maximum. Appreciate your help in this regard. Thanks a lot. Happy trading. Happy learning.